Stavros Tousios for M4Markets. We're going to have a look at the S&P and Swiss franc against the Japanese yen today. I just wanted to bring your attention to the S&P because we have a divergence signal here, and it can be considered as double as well, depending on where you draw your lines from there to there, from there to there. It's the same point of reference, of course. So maybe it's a single sort of divergence extended to two different points and not a double, just to be a bit more precise. It's interesting that we have broken to 42.25 or so above the previous high, and that was considered a triple top, but we haven't really gone that much far, and this combined with the RSI divergence could be an indication that we might see some sort of consolidation here taking place. That, and from the bottom to the top, could see the 40.80 coming back into play, if of course the 23 is taken out, and if of course we fail to cross above that high. Now, failing to cross that high doesn't necessarily mean, oh, you're just going to tap into that territory. It also means that we see a successful breakout, which to me at this moment at least might be a little bit hard to achieve. A little bit higher though, it wouldn't be, of course, something impossible. It's never impossible. Now this looks like a triangle as well, and typically the triangle measured move is the 100% of the length. This gets us quite high. That's the 43.50, which is much higher to what we expect prices to actually do for now. But let's not forget, this is just a guideline. You know, we don't necessarily need to get there. We have to keep an eye on 42.60, 42.95 as well, in case we continue to go higher. I will be also pulling a channel over here. You see, it's exactly where we stopped. And let this guide you in terms of where we're going in the short term. Now, when it comes to the Swiss franc against the yen, we also have a double divergence here. This, so far, is a breakout as long as we're above 154, okay? The moment we'll break below that level over here, there is two chances here. We go straight down for a correction or a reversal, or there is also the potential for that to turn into a wedge, okay? That would be followed by some sort of move to around anywhere between 38 and 62%, and from there we would see one more leg up. That would probably give us one more divergence, which is going to make it a super signal based on the RSI, of course. And then what else we can do is throw a channel over here. You see, we have had that bounce. The trend over here for now is still accelerated. Typically what happens, we see a leg to the downside, a rejection, one more up, and then something like this. Okay, either up or we'll continue lower down, depending on whether it is a correction or a reversal. Down at the 1 hour now, that we're going to see that we keep bumping into that overbought territory here, okay? And we have done so 3 times without actually seeing a divergence and without seeing prices really slowing down. For that reason, I'm saying that 153.96 so is an important level, because falling into that territory will open the door to 152.85, okay? And then you go down to 152.39 or so, and then all the way down here, as long as of course we play the 50s always. This is our sort of sentiment gauge, and 152.15 is the level that we'll have to pay attention now in the short term in case we start falling from here. Pay attention also on the RSI. Let's not forget, the moment we're going to go oversold, there was probably going to be an expected correction, with the 50 again playing its own impact in how prices could pan out.